The chart in front of us is S&P 500 M&E futures. Time frame is 2000 tick chart. The structure right now is a trend range. For that reason, I'm using the shortened channels as a price action trader to help me follow the price action because I want to follow the trend line rule. We have multiple swings up and down, big up, big down, big up, already indicating that this may be a trading range structure. I need to identify the key level, low of the day support, the high of the day, and right now we can see that we have a correction after break, 2 legs to a new extreme. Prices are right now approaching the main support, and in trading ranges, prices will most likely bounce from these lows and they will go back and test these highs, and once prices will reach these highs, they will go back to the support. Now this is how you can see the prices are working in this trend range, up, down, up, down. Right now, this downtrend has a break, a new extreme, indicating to me that this downtrend played out at least temporarily. But if I look at the structure, I can see that prices still remain below EMA for the most part. So I'm not sure if I'm going to take a failed second entry short reversal pattern this quickly. It feels to me that we may have additional move down because EMA has been rejecting every single time. We'll see what the prices will do here. Prices reach the top of the trend range, but right now we are right at the highs of this trend range. So I have two conflicting patterns here. I have an uptrend working higher, which we had a massive bullish spike called by the news, but I cannot go long directly into these highs. At the same time, I cannot really sell just yet because this uptrend is getting quite confirmed. Even though it seems a little bit wide, it's not fitting that well off the highs. I have to respect it. So this is the area on the chart where I'm just waiting for prices to break in either direction, but it looks like we may actually straight up reverse. So I'm gonna think bearish now. All right, traders, I'm resuming the video as I'm going to take a failed second entry long if we get the trigger. I'm waiting for trigger below this big bearish bar. Reversal pattern. All right, so we got fill in the trade. I'm going to go for 8 tick target profit. I put my stop loss 1 tick above the signal bar. A new high, first entry long pullback, second entry long failure off the EMA, off the wider channel. But we may get actually trapped because there may be some residual momentum on the bullish side. It looks like, let's see here. New low, first entry short, pullback, second entry short. It will give us momentum, but it doesn't look good. Once it ticks high, reverses up, we may have additional move for this uptrend because we had a break, attempt to create new high, but the resistance held strongly. Now we pushed below EMA twice, new high, first entry long, pullback, second entry long, failure. Come on, can we hit the reversal pattern here? And we got out. Perfect. It was a little bit stressful. They got me doubting. All right, so my stop loss was moved to break even because right now anything we have left is just a bonus. This is just a runner. The reason why I like this failed second entry long is because this uptrend had a break, attempt to create new high, and notice once, twice, 3 times this resistance at this area is holding. It is also the high for the day, important key level that will come into play, and I'm playing the trading range rules. Okay, we're gonna buy low, sell high, and right now I'm at the highs, but I cannot really just pick a top just yet. It is too congested. I need to see proven, safe, high probability setup. So we push below EMA. Okay, good confirmation. We will first entry long, pull back, second attempt by the bulls to buy the market. But this attempt, this second entry long, is below EMA now, and the new downtrend has started. We're coming off the trading range. So I'm combining the trading range rule with the trend line rule because this has two swings right here, set up the trend line, third swing confirmation. So we have failed second entry long here, and you can even enter a safer setup, new low, first entry short, pullback, second entry short confirmation. And you guys can see I was doubting a little bit because it ticked lower and instantly reversed against me. It was quite scary, but you can see this second entry short is even a safer setup because it confirms the failed second entry long. And you can see we have quite a strong momentum. I'm giving my runner room, even though I'm risking getting stopped out on the runner completely, mainly because I'm playing the trading range rule. In trading ranges, you're most likely going to go right from the top, straight to the bottom. So I'm following the bias and following the trading range rule. It is possible that we may go and stop me out. Normally, I would trail a little bit tight, but not that many times you get a chance to catch a runner at these highs. And yesterday I managed to catch a decent runner. So I'm betting on probabilities that the market will go all the way down to here. And if we start getting a little bit lower and lower swings, then I will start trailing it all the way down to these lows. All right, traders, I'm going to trail the runner below this swing right here because we just had another break, another new extreme. And we can correct strongly now. So I'm going to lock in something around 9 points, which would be a decent runner to start the day with. Of course, I would like for prices to reach all the way down to here, straight on this one go. We had a new low, first entry short, pullback, second entry short, which is a 2-leg up pullback. First leg up, pullback, second leg up, and we got stopped out here. So this is a two-legged pullback. Uptrend played out with the break and a new high. You're at to 2 key entry points, the trend line and the exponential moving average. But notice my signal bar was terrible. If you had a nice bearish bar, you can go short here, but I would not sell below this bar right here. I would need a little bit more bearish body. In that case, you can take a short because the more key entry points you have, the stronger the setup is. So the signal bar may be weaker, but the signal bar is really weak. And even 2 key entry points are not too good for taking this signal bar here. The bearish bias is continuing. Every single time prices push above EMA, there's a strong push back below EMA. So right now I'm just waiting because I don't want to sell above EMA, but I don't see strong bullish reversal just yet. So at this point on, this is one of those times where I have a break multiple X to new extreme, but right now we're about to reach the low of the day key level again. I'm not going to be buying the bottom though, because the downtrend was quite strong. We traded from the very top all the way down here. I would need to see a failed second entry short above EMA, but right now the bearish bias is still quite strong. I'm using these shortened channels just to keep me on the right side of the market. I've been sitting here for quite some time without a setup because we just had a slow gradual movement to the downside. But for the most part, every single setup formed above EMA and we never got a decent low high that would confirm the second entry short. So this was just a lot of chop. We eventually made a break, new extreme for this downtrend, and right now we're bouncing high. I'm expecting that we may have a smaller trading range forming at the bottom tier of the bigger trading range. So we will see how the prices will reverse now. But right now, the downtrend had a break, new extreme. The bigger trading range is still coming to play the low of the day. And right now we're bouncing off the lows. No setup throughout this area according to high probability setup rule. Alright traders, I'm resuming the video as I'm going to take a second entry short and a failed second entry long. New high, first entry long, pullback, second entry long. A new low, first entry short, pullback, second entry short. I'm going to go for a tick target profit. We push strongly below exponential moving average. This downtrend is in play. We have new low, first entry short, second entry short. New high, first entry long, pullback, second entry long. Off the EMA, off the key entry point, big bearish bar. Downtrend needs to get new extreme. And we got filled. So I'm going to quickly tighten the stop loss to break even position. Anything we make on the runner is just a bonus, but we may get stopped out here. We made a break, new extreme. The uptrend played out. Notice we have uptrend working higher. First leg to new extreme, pullback, second leg to new extreme, indicating that this uptrend is over. Strong push below EMA is confirming the bearish momentum. And notice right here, the exponential moving average is pretty much flat. A lot of up and down, even though there's a bearish bias. This was our second trade for the day. So I already thought that we may have a smaller trading range inside of this bigger one. And there was a failed second entry long, 2 high probability setups at one, and a second entry short at the same time. So EMA was holding, downtrend is a break and new extreme. And you would expect for prices to reach all the way down here. So it was a second trade. Our runner got stopped out, but it was good enough for a scalp here. All right, traders, I got my 2 trades for the day. I'm going to wrap it up. We get a one nice decent runner, so there's no need for us to push it. If you made it to the very end of the video, so you're probably enjoying the content, so please like the video, subscribe to the channel if you haven't, and you're interested about day trading. I'm going to see you guys in the next one. Take care, everybody.